So we've had some interesting data and news items come out recently over the last couple days and couple weeks regarding some S&D or supply and demand in the state of Louisiana. So I thought it'd be interesting to put together maybe a series on Louisiana and how I look at that market from a supply and demand standpoint. It's honestly a market that I didn't have really a deep understanding of until I kind of did a deep dive here over the last couple weeks and worked on it and looked at it in depth, some of the ins and outs of the pipelines, refineries, things like that. And it's an interesting market, and I think that there's some newsworthy items that we can go over and I showcase some of the new features we have with the tool. So with that said, let's dive in. We'll take a look at the map view here. Again, as a reminder, I will summarize this video and put a summary article below the video in the Substack feed. So you can read that, probably be a 3-minute read. You can get 90% of what I'm saying from that if you don't want to watch the whole video. So I guess to start, the news item that I wanted to cover here, again, I said that we'd be covering Louisiana, but a good place to start would be the announcement and some data that shows that CITGO is actually expanding one of their pipelines from Texas to Louisiana. That's their Sour Lake Pipeline. So we'll take a look at that, and then we'll zoom out a little bit and talk about Louisiana a bit. But this is the pipeline, and it runs from their Sour Lake facility here, and then moves oil over into Louisiana and into their Lake Charles Refinery here. And just to orient everybody, the gray dots are the refineries. So if you just hover over this, you can see there's the CITGO refinery capacity 455, right around 460,000 barrels per day. So if we click on the flow point here, you can see that expansion that's happened. So the company has announced this over the last few quarterly earnings that they would be expanding that pipeline, and we're seeing some more oil flow through that pipeline. So as of now, it's right around 290,000 barrels a day of capacity. They disclosed in their latest quarterly filing that would be increased to 320,000 barrels a day of capacity by late June, early July. So you have a pipeline, and just for reference, this carries light oil mostly, or probably all. It's a 20-inch pipeline, and it's previously moved around 250 or had a capacity of around 250. They're boosting that to 320,000 barrels a day. So there's potential that some other pipes may lose out on that. Maybe some imports get pushed back. We'll take a look at that here in a minute. But I wanted to zoom out first and talk about, and I'll clear this out, talk about the state of Louisiana as a whole. And as I've done this deep dive myself, how I look at this and how I think is the simplest way to look at this market. So again, gray dots are the refineries. You notice there's really 3 clusters of refineries. So I would cluster this, the southwest corner of the state. These refineries, which include the CITGO refinery, which I just mentioned. They have these northwest refineries here. These are smaller refineries. And then you have what I would say like the refineries along the Gulf Coast and up near Baton Rouge that are larger refineries and more tied to offshore production. So to take a look at, and I'll just bring this up really quick, to take a look at what the balance looks like for the state. Really, the first thing I would highlight here would be the refinery inputs here. So the big deal for this state, or most of the oil demand from this state, is going to be driven by refineries mostly. So not uncommon, but if you look at the actual data, it's about 2.6 to 2.7 million barrels a day of refining input. So that's crude input into the refineries. So to feed those refineries, the main source, as I kind of mentioned here a little bit ago, again, this area here is going to be the highest refining density. Let me just clear this out. This area here is going to be the highest, or the largest refining density and the highest refining density, and then you have quite a bit here and then smaller stuff here. But to feed these refineries, the the main source is going to be production from offshore, from the Gulf. So you have offshore platforms here that are feeding the state. So about 1.4 million barrels a day come from that. There's also a little bit of onshore production. So onshore production from mostly legacy wells. I have it at about 80,000 barrels a day. I bump it to 100,000 barrels a day due to some probably stabilized condensate and drip station condensate that can be used in some of these refineries. Again, balancing this against the 2.65 million barrels a day figure, you're going to need oil supply from somewhere else to balance the market, so to speak. So what you get is you get net imports on pipelines of about 1 million barrels a day. So that comes from a variety of places. You have Capline coming down here, bringing heavy crude. You have Mid-Valley and CITGO Pipeline coming across here and feeding some of these refineries and feeding the Arkansas refineries here. And then you have the 3 pipelines down here that we'll talk about today. So this will be what we'll talk about today is kind of this cluster here, these southwest refineries, and this corridor here, which is covered by the CITGO pipeline, which is called Sour Lake Pipeline that we just brought up. Also Energy Transfer and P66 JV called Bayou Bridge. I've talked about that in a prior video that covered Energy Transfer. And then we'll take a look at Zydeco. That's a Shell pipeline that moves oil from the Houston and Beaumont and Nederland areas over to this Lake Charles area and further down the line as Bayou Bridge does. So let's take a quick look at that. Let's pull this up really quick. Let's zoom in. We'll pull up Sour Lake again, just so you guys can see it. And the refineries here have a total capacity of about 850,000 barrels a day. So it's only 3 refineries, but they make up a decent chunk of the total state's capacity. 850,000 barrels a day. Again, the total state input was about 2.6 to 2.7 million barrels a day. And the largest one of these is this CITGO refinery here. So 455,000 barrels a day. You also have a Phillips 66 refinery, their Westlake or Lake Charles refinery at 264,000 barrels a day. And then Calcasieu refining at 135,000 barrels a day. So I showed the flows on the Sour Lake pipeline already. You can see that they're jumping up. We would expect that to continue. If we actually click on this point here, and this is one of the new things that I'd like to highlight, is in Louisiana and some places in Texas, I've allocated the deliveries or the transactions at the receipts and delivery points to where you can see which counterparty those deliveries and receipts go to, or where the receipts come from or the deliveries go to. So in this case, it's pretty boring. It's just one counterparty. So CITGO is the delivery counterparty for this pipeline. Nobody else in this area, not P66 or not Calcasieu, gets any of the actual barrels from this pipeline. Everything goes to CITGO. So let's clear this one out. Let's take a look at Bayou Bridge. So if we look at the flows on Bayou Bridge, you can see it's increased over time. This pipeline came online in 2016 and ramped up since then. If we look at the actual transaction data at this delivery point in Lake Charles, you can see the counterparties are listed here, or shown here, I should say. In the dark blue, you can see how much CITGO is getting. Looks like for the first few years this pipeline was in service, it didn't actually use the pipeline a ton. So their deliveries did ramp up over time. Really in 2021 and 2022, it appears the deliveries ramped up for them. The main delivery counterparty is Phillips 66. Not a surprise, they are a partner on the pipeline. And they are using those barrels to feed their Westlake, Lake Charles refinery up here. We'll take a look at Zydeco quick. So the flows on Zydeco, not bad. They've done a pretty decent job of keeping this somewhat full, even in the face of Bayou Bridge coming online and kind of um, putting some competitive pressure on this pipeline. So if we look at who they deliver to, I actually have both delivery points marked here. So these will both be singular transactions. So let's say anywhere from 20 to 40,000 barrels a day they're delivering into Phillips 66 facility. And they're also delivering into CITGO. So let's call it right around 50,000 barrels a day. It was a lot more, really peaking over 100,000 barrels a day back in 2022. So a point really quick to talk about as far as grades and quality are concerned. Zydeco is moving mostly light oil. CITGO is moving mostly light oil. I think I mentioned that earlier. Bayou Bridge can move both heavy and light. So that's something to keep in mind if one of these facilities is reliant or would like heavy crude. Bayou Bridge is the only one that can really only one of those three pipelines that has any type of material, heavy oil that I'm aware of, space to bring heavy oil to these refineries. So a potential advantage for Bayou Bridge, certainly, with the lower cost heavy oil, assuming these refineries can take it. And I think they can all take some. I realize looking at those flow points, it was a little bit hard to like parse out any type of downside that we've seen since the Sour Lake flows are so recently ramping up. It's kind of hard to see if somebody else has lost volumes because of CITGO taking more volumes through the refinery. So I went ahead and I pulled the data for the refinery and saw their input and graphed it a little bit differently. So these two graphs that you see here they're exactly the same data. They're just shown differently. They're illustrated differently. So let's focus on the top one first. So the purple bar at the top is the capacity of the refinery. And then the stacked bars are where CITGO has reported they're getting their volumes from or their crude input from. As you can see, Sour Lake, you can see if you just focus on the dark blue, you can see the ramp up as we get to May. That's the latest data we have. Zydeco, small, kind of bumps around, as well as Bayou Bridge. But what's really noticeable is it doesn't appear, at least yet, and it may be just early, it doesn't appear that any of the pipes have lost material ground as Sour Lake's ramped up. It's just that Sour Lake has filled the refinery. So the refinery went through an expansion in early 2023 to get it to the 460-ish thousand barrel a day mark, but they haven't actually been operating it at that level until really late 2024. So one of the things you've seen is the ramp up in the Sour Lake volumes have helped to fill this refinery up to capacity. So looking at this pipe and being like, do we notice a significant decrease in Zydeco or Bayou Bridge because Sour Lake is moving more crude over? I can't yet. And let's look at the second graph, the graph below. You can see it a little bit better visually. You can see the Sour Lake ramp up here. Certainly there's a downtick in Bayou Bridge more recently, and it's just hard to tell if that's something we should expect going forward or if we've seen downticks and it's been somewhat volatile. A lot of variance in that pipeline historically as well. Same with Zydeco. And this refinery just doesn't take very many barge volumes, just a small amount of barge volume. So in a vacuum, I would have said, hey, Sour Lake's bringing on more capacity. They're pumping more oil through this pipeline. It's all going to the CITGO refinery. We would expect some potential volume pressure on Bayou Bridge or Zydeco. We haven't really seen that yet. We see what happens. We'll see if they continue to operate this refinery at nameplate capacity. If that were to drop down, I would say it's likely you see some barrels come off of some of the pipelines that aren't owned by CITGO. So I guess the other thing I would point out would be would be tariff rates and minimum volume commitments. It's extremely likely, and I'll just bring up the map again. Let's bring up Bayou Bridge. It's likely that that CITGO has a minimum volume commitment, a commitment of some sort on this pipeline. I can't say that's for sure. Again, this Bayou Bridge came online in 2016. If you go back and look at the tariff filings, the original terms were 5, 10, and 15-year agreements for this route from Nederland to Lake Charles. So at varying capacity levels, commitment levels. So 2016 start date, a 5-year would be run out in 2021. A 10-year would run out in 2026, and a 15-year would run out in 2031. So they actually re-upped or redid those commitments, it appears, via a filing in early 2020, and the commitment times then were changed on the filing to 5, 7, and 10-year commitments. So I don't know if that's reset from 2016 or if that's reset from 2020. If it's reset from 2020, you're looking at a time frame of 2025 to 2027 for those 5 and 7-year commitments of when they run out. There was also a 3-year commitment that was started in 2023 or 2022. I'm sorry. So if CITGO is a commitment on that 3-year commitment, that would possibly run out in 2025. So to sum up on the tariffs and the potential commitments, it's possible that CITGO has commitments on this. I would say it's likely that CITGO has commitments on this pipeline. Again, let's click on the point. Let's look at the transactions. You can see they're a main shipper on this pipeline, and it's ramped up over time. It's very possible that they were one of the parties that did the 3-year commitment in 2022. So this may be a situation where they reduce some of their commitments on this route because they can pump more through Sour Lake. And remember, yes, Sour Lake's running at capacity. We haven't seen significant fall off from Bayou Bridge volumes yet. But that could be something. There's still 30,000 barrels a day of capacity coming online for Sour Lake. They may not run that refinery at nameplate capacity going forward. So potential downside there for Bayou Bridge. I would like to note, and it was surprising to me, we just briefly touched on this Calcasieu refining facility. This doesn't actually take barrels from any of the pipelines that I've seen based on the data, at least not recently. So they are directly in line of Zydeco, Bayou Bridge, and CITGO, and don't take oil off any of them. They're reliant on marine imports. So a lot of those are probably coming from Texas on barges and ocean going barges, which is interesting to me. That would be a potential area, and I'm sure they've tried. I'm sure this refinery has their reasons on why they don't use the pipelines. But that would be an area where I would think that the pipelines could maybe pick up a new customer there and increase some flows into that pipeline and displace some marine flows potentially. Zooming out, I think that about covers this market. So something I forgot to mention, I think it's interesting. I think I briefly talked about it earlier, that your choices for crude are really these 3 pipelines coming across here. And one of the main reasons is you're just disconnected from all the production, all the Gulf production that's like in this area. All the pipes go this way. So I actually pull up Shell. So this is just a partial look, but they have a huge offshore system, and their system does look a lot like everybody's system out there. The systems all go to these refineries here. So you're really cut off from any offshore production in this southwest corner. You're 100% reliant on either marine imports or these pipelines to fill your needs. So I think that summed up things pretty good. I'll keep an eye on the flows going into Lake Charles and these refineries and see if we see a dip down in Bayou Bridge volumes. It's not going to be material for them, but it's one of those things that it's good to keep an eye out. These refineries, we'll cover either this section, the northwest section, or the southeast section, or this big section on the next video. These are interesting because of the offshore implications. So really, these are being fed by the offshore. So increase in offshore production, good for these because it brings more supply in here. Probably bad for pipes like Zydeco and Bayou Bridge that are trying to push more Texas volumes across. If we get static refinery utilization here and we're pumping more Gulf volumes into this area, you could push back some volumes on Bayou Bridge and Zydeco potentially. But we'll talk about that one next time. There's some interesting stuff with that for sure, and you may not actually see volumes come up in this area. So thanks for joining us again. Reach out if you have any questions. We're just plugging away. The counterparty stuff, go ahead and play around with that if you have access to the tool. If you want to play around with it or have access to the tool, reach out to me. I'll put my email in the body of the article, the summary article of this video. So yeah, reach out. We're always happy to answer questions. Thanks. Have a great day.